Hello once again, and welcome to another edition of the SaskAgToday.com Roundtable. We're joined by the Chief Agricultural Editor for SaskAgToday.com, Kevin Hursh, and the Regina 620 CKRM AgriNews Director, Ryan Young. I'm your host, Doug Falconer. I'm Agriculture Director at GX94 Yorkton. First of all, as we have been for the last maybe 2 months or so, we'll talk a bit about harvest. Saskatchewan, the latest crop report, 79% of the crop is in the bin, while east of us in Manitoba, it's only at 58% complete. Your reaction to that news, Kevin?
Now, things are proceeding, but we did have that giant rain, especially giant rain in southwest and west central Saskatchewan. It's interesting to see the map of where the rain went in the latest crop report from Sask Ministry of Agriculture, that rain really hit an area that had been missing rain for a long time, but rain in a lot of locations has slowed some things down. I'm in Saskatoon, was just out on a farm this morning and into the early afternoon, and they still have a bit of wheat left to do that they were working on, and some canola to do after that. The majority of crop is cleaned up, but even here in the Saskatoon area, there's still some to go.
Ryan?
It's kind of a similar story around the Regina area. Combining operations have slowed down a bit because of the rain. A few more crops have come off, obviously, around my area in Grand Coulee. It's kind of a similar picture as it was last week. A lot of the crops have been taken off and done for the season. But yeah, a few silver linings to the rain. Obviously, where Kevin farms, for example, the moisture is greatly appreciated, as well as livestock producers. They're really appreciative of the rain, I could imagine, with pasture land and greening things up, and the moisture levels in the soil have improved to a much more adequate level. I believe in the crop report for cropland, it's well over half. Hayland, it's over half, and pasture land is about half percent adequate as well. So that's good news. As well as the livestock water supplies, a lot of producers saying they don't anticipate a shortage of water supplies later into the fall, but there were some that kind of had a moderate shortage. And another positive as well is the water quality. A lot of producers, they don't expect the quality to be bad at all, but rather pretty good. So a few silver linings to the rain that we had. Of course, it slowed down harvest, but around here in Regina, just kind of a speed bump, so to speak.
Yeah, here in the east central part of Saskatchewan, we also got some rain, not as much as they did in the southwest. I know I have an aunt who lives in Mancota, Saskatchewan, and they had around 4 inches the one day alone, I believe. And it wasn't a pounding rain, it was just one of those slow, steady rains. So that would have set anyone back if they still had crop out. I would think most people down there were done. But I know there are some places, I guess, closer to your farm in the west central area there, Kevin, where there's still some work to do. Here in the east central, we're about 75% done, I believe. We took out supper in the field on Wednesday to a farm not too far from here around Spy Hill, which is just south of Langenberg, and they were making pretty good progress there. They didn't think they'd have too many days left. So, and as for Manitoba, of course, they're quite a ways back of the rest of us. They've been wet, I guess, pretty much all year. So that's why they seem to be a little bit further behind everyone else. Of course, the other big news this week was the grain terminal workers strike out in Metro Vancouver. And is there a lot of concern over that, Kevin?
I think there's a lot of concern. It's tough to see the immediate effect because there has been space in country elevators. There's probably some ability to spot rail cars along sidings on the way to Vancouver, but it's bad news, especially coming on the heels of the CN and CPKC slowdown and then strike lockout. So it's certainly not needed and doesn't seem to have an end in sight, which is really worrisome. And I know the terminal workers have been making the case of, oh, these are very profitable agribusiness firms, and we stuck with them through COVID, and we stuck with them through record high inflation, and they can afford to pay us more. And whether they can or whether they can't, I would make the argument that, yeah, the elevator companies pay initially, but in the end, it's farmers that are paying because the elevator companies all face the same terminal elevator costs. Eventually, that gets passed along to farmers in increased basis, increased margin, and becomes a farmer expense. And when you hear some of the reports of I don't know what everybody makes for money at terminal workers, but when you hear that janitors make $50 an hour plus a very generous pension contribution, $50 an hour sounds like a lot of money to somebody from Saskatchewan. So I don't have a lot of sympathy for the union, but I do think that we need a better way of resolving these sorts of disputes that don't hold the entire grain economy hostage.
And on another subject, Ryan, Elite Processing put out a news release this week in the Regina area, and that's something you were going to be following up on.
That's right. I'm going to be speaking with the president of the company, Tim Weens, I believe his name is, if my memory serves me well. Kind of quickly glancing through the news release, I came across it the other day in my work email. It's a fairly considerable expansion. I believe it was about $10 million expansion to increase their manufacturing capacity here in Regina. So that's great news for the Regina area, and I hope to speak with him next week on that and what it means for the company, how this will benefit producers, and go from there.
And what was your reaction to that news, Kevin?
Yeah, Elite has been a great buyer of especially things like flax that they put in various ration formulations. Been a long-standing company. I don't think they have signage on their, if I'm thinking their plant is the one just northwest of Regina on Highway 11, I don't think there's signage there, but Elite has become a big buyer of a lot of crops such as flaxseed for animal rations, used in the egg laying industry, which is O&T Farms, the other side of that company's operation. And with the expansion, the $10 million expansion, they're set to buy even more and export a lot of their products. So it's not of the size and scale as a canola crushing plant expansion or a new pea protein facility or something like that, but a $10 million expansion is still going to be a significant boost to the area.
And of course, Agriculture and Agri-Food Canada put out some information regarding prices, the crop outlook prices, and you provided a report for us on that, Kevin, this week for the Farm Show.
Yeah, every month they come out with their outlook for principal field crops, and I was actually astounded to see how much they had dropped the new crop average price estimate for peas, lentils, mustard. Mustard maybe not as big a surprise, but a big drop just from the August report to this September report. And it's a little counterintuitive because we've seen canola bounce back from the news of a possible tariff by China. We've seen some strength in large green lentil markets. Some of the crops have edged higher. I would even argue that feed barley is stronger than it was a few weeks ago. But the Ag Canada analysis, especially on the pulse, chickpea, pea, and lentil, and as well mustard, their outlook for the new crop year is down dramatically in their September report.
And of course, canola and wheat prices seem to trade up not too bad over the course of the week. And Ryan, you had a chance to speak with Adam Pacallo on Friday. Sounds like canola was up a bit and wheat was kind of just trading sideways.
Yeah, pretty much. Canola, I noticed it had quite a bit of a rally on Wednesday. It went up quite a bit. Adam said it was trading around $619 a metric ton. And then it went down after that. And I even noticed that in the price for canola from the Moose Jaw Viterra terminal, it also shot up as well, right over $550 or $560, something like that, before it dropped again. And now it's back into that 554 range. So kind of a up and down kind of a week for canola, continuing to, be volatile and just not stick to one end of the contract or the other. But what also Adam kind of talked about too is, just it's trying to break through. It's trying to break through that resistance level around the $600 mark. And it's the same thing with the wheat futures too, kind of hovering around that $6 a bushel mark. And it just seems like those contracts just are waiting for something to kind of trigger it to get it to the next level. What that would be exactly, he's not really sure what that could be. He mentioned that there's going to be a USDA report that'll come out next week. and we'll see if the markets kind of react to that one way or the other. So it's just kind of a synopsis of what we talked about on Friday.
Your thoughts on the prices, Kevin?
Yeah, if you look back a few weeks ago, the canola had really sagged, and the price that a producer could get at the elevator, I think it was down into the below $12, well below for a while, and now we're back up to in around the 12.50 range at least. So it's gradually clawed its way back from what was a very low level, and because it had dropped to that low level, the price now looks relatively attractive, but if we compare it to the price a year ago, I think we'd be pretty astounded by how low canola is compared to what it was 1 year ago at this time.
And finally, Farm Credit Canada put out a news release this week, Ryan, and you had a chance to speak with someone from them and how they've, I guess, made an arrangement to have another lending agency help out.
Yeah, unfortunately, I couldn't reach out to anybody from Farm Credit Canada. They didn't have anybody that could speak to the topic, but what they announced was they committed $60 million to an alternative lending firm called Glengarry. Now, the concept of alternative lending, it's kind of a new world for me. And when I was talking to one of the executives over at Glengarry, he said it's kind of a new thing. There isn't a whole lot of players in the alternative lending market. It's kind of a riskier thing compared to your traditional financial institutions like banks and credit unions. What they provide is an alternative source of financing for farmers who are having credit issues with banks or credit unions and can't get a loan from them. So this is another option. What this investment provides is just basically more capital for Glengarry to provide for farmers that need that extra capital to make payments or to make purchases of farm equipment, cover their expenses, etc. And that could range anywhere from $1 million up to 10 million. So this will really help out Glengarry moving forward. And yeah, that's kind of the announcement.
What's your reaction to this sort of thing? Have you heard of Glengarry before, Kevin?
I've heard the name, but don't know very much about them. I'd really be interested in the terms on loans such as that, because as soon as you are a risky investment that regular lenders, whether it be FCC or the other notable lending institutions or even credit unions, if they won't touch you for credit, but somebody like Glengarry will, makes you wonder what the interest rates are, what the terms are, what's required for security. So I would want to see the details on this, because if regular lenders don't want to lend to you, usually there's a pretty good reason.
All right. Well, on that note, that'll do it for this edition of the SaskAgToday.com Roundtable. On behalf of Chief Agricultural Editor Kevin Hursh and 620 CKRM Regina AgriNews Director Ryan Young, I'm GX94 Yorkton Agriculture Director Doug Falconer saying so long until next time.